With oil prices plunging, concern about economic growth, and a federal election in the offing, Canada's top executives have a lot to think about headed into the new year. They told us what's been on their minds in the 37th edition of the C-Suite survey. Expectations for economic growth in Canada have taken a sharp turn south. For the first time in 2 years, more than 20% of top execs expect the Canadian economy to decline over the next year. That stands in stark contrast to expectations for the U.S. economy. 25% of execs think it will grow strongly over the year. When it comes to their own companies, the services sector is slightly more bullish about its outlook. 1/3 of those in the C-suite expect strong growth, while the resources sector remains the most pessimistic. How does any of that translate to what Canada's top executives want when it comes to government policy? In general, they think the government should focus on growing the economy, increasing productivity, increasing GDP growth, expanding trade, and creating more jobs. But when thinking specifically about their own companies, the C-suite tells us that tax cuts are the most helpful thing government can introduce to help their businesses. For perspective, we turn to the president and CEO of Empire Industries, a company that designs, builds, and sells engineered steel products. Guy Nelson joins us in studio, alongside the president and CEO of gold exploration and development company Rox Gold, John Dorward. Gentlemen, good to have you with us.
Good to be here.
Are you in that 20% camp that's bearish about 2015?
I'm not bearish at all about 2015. We're a manufacturer, so the weaker dollar has a big impact on our business because we export 2/3 of our product does get exported. And I'd say the third that stays in Canada, it really is not as dependent on oil price drops. So we actually have other markets that we serve even in Canada.
Do you actually benefit from the cheaper oil considering how heavy these products are and they need to be shipped?
No, that would be a minor part of our overall cost. So it's not a factor for us.
And for you, John?
I'm optimistic about 2015, but I'm in the gold business, so you have to be optimistic to a certain extent. I think when we look at the oil price, that has some positive impacts for our business. And I think at a general level, I think for Canada, there are obviously some winners and losers with the fluctuation in the price, but I think that there will obviously be some positives to come out of it.
Okay, you mentioned the Canadian dollar component to this. No one seems to be expecting parity anytime soon for the Canadian dollar. What does it look like to you in 2015?
I'd say more of the same. Weaker dollar. The par days were when the oil and the mineral commodity pricing was higher, and I think we're more into the current environment pricing for products like that. So I think the weaker dollar is here for a little while to stay. So that for exporters, that is a good thing.
Is it a bit of a double-edged sword for you, or are you happy with the dollar at 75 to 85 cents?
I think a strong US dollar is never a good thing for the gold price. I think a lot of our costs are denominated in sort of euro, the West African economy where we're in Burkina Faso, the currency is tied to the euro in many respects, so we do have a pickup in lower costs. We'd like to see a little bit of the strength come out of the gold price, out of the US dollar price, which generally has a positive impact for gold.
And as far as the mood out west, of course, most of what you do is on that side of the country. What's the sense out there right now? We were just talking to Calgarians, and they're getting nervous about oil at these levels. What's your sense broadly about the economy out west?
Well, I'd say in Alberta, it obviously is impacted by lower oil prices. There's just going to be less cash flow to invest in oil sands particularly, and that's a huge driver. Over half the capital expenditures in Alberta are oil sands related, so it's when the price goes down, you have less to spend. So those will be deferred and cut back next year. But I also see over the longer term that resource will find its way to markets. The pipeline issues will get solved, and it will continue to resume its place in the Canadian economy, which is an important place.
We had looked at sort of the sentiment about the economy in general and what the government needs to do to help push things along. And it seemed that executives were saying when it came to their own companies, the best thing the government could do is cut their taxes. But when it came to the broader economy on the whole, the best thing they could do is invest in infrastructure and social programs and things of that nature. Where's your head at right now?
Look, I think certainly for us, attracting, we employ people from around the world, so taxation is obviously a consideration. Lowering personal income tax, I think, generally would make the country more effective or more competitive. In terms of going forward, that's something that we're obviously very keen to look at. I think infrastructure as well is, as long as it's appropriately sort of spent and a lot of thoughts put into it, is a very strong investment in the future.
Debt repayment also was critical on that list. Is that something that you think about on a day-to-day when you think about Canada's finances?
Not really. I mean, I think we focus a lot on what we're doing in West Africa, so it's a fairly specific subset of that. I think, again, Canada, I think, is in a relatively robust financial position compared to a lot of countries around the globe. So I think if it can pay down debt, that's a wise investment in the future.
And Guy, what would you say your highest priority would be if you were in Mr. Harper's shoes?
Well, I think they've done a very good job on managing since the recession. So the cutting the tax rates would not be a high priority for me. I think we are as competitive, if not the most competitive, on the corporate and personal tax rates. So that's not a priority for me in any event. I would focus on science and technology. That is an investment in the long-term health of the economy, that long-term prospect for growth and jobs. And we have slipped a lot in the rankings over the years. So we're now in the bottom half of the OECD countries in spending on science and technology, and that's not a good place to be.
Does that affect your business specifically, or are you thinking more on a broader, bigger picture basis?
A broader, bigger picture. We invest a lot in research and development. We have to innovate a new product, new amusement rides that we export. We'd like to think we export fun, so you've got to be good at exporting fun. You have to have the best products, and we do create the best products and sell them around the world. So we invest heavily as a company compared to what we make. But no, I'm talking more about the general economy. I think, there's if I were to advise, I would hardly ever want to advise the Prime Minister what to do, but science and technology needs a lot of work.
To your point about exporting fun, give us a sense as to what your customers' customers are thinking these days.
Our customers' are, of course, in Disney, Universal are spending big money in China. Disney spending $5.5 billion in Shanghai. Universal spending $3.5 billion in Beijing, and then the list goes on. Then the non-Disney and Universal market is probably 80% of the market, and so they're spending equally as robustly. Their customer, the end user, the people actually going to the parks and trying to, the growing middle class is really robust in China. We read a lot about that part of the Chinese market that's slowing the growth rate down, but the part that we service is double-digit growth.
I can imagine it's not the roller coaster ride that you were looking for on the equity markets, but elsewhere it's all fun and games.
That's right.
Gentlemen, thank you so much for joining us today.
Thank you.
Thank you, Mark.
Guy Nelson is the CEO of Empire Industries, and John Dorward is the CEO of Rux Gold. If you're looking for more on the C-suite sentiment, all you need to do is go to BNN.ca.